women often feel like they are not good with money or they have a problem with money. And my belief is really that money isn't the problem, but the money system that we're living in right now is the problem. And that's why I believe so much in Bitcoin, because it brings a whole new money system.
Welcome to Women Take Stock. Today, we're returning to one of our favorite topics, cryptocurrency. A few episodes back, we started to tackle this seemingly mysterious part of the financial world, but really, it's a universe unto itself. And at first blush, it's pretty complicated. It's also incredibly interesting. And if you're lucky, potentially lucrative. Or you could totally lose your shirt. So today, we're going to dig a little deeper into the crypto universe, including an interview with a woman who changed her entire career to focus on helping other people navigate this new terrain. But first, let's start the show. Tula?
La 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 la.
We are four friends all at different places in our financial and personal lives, looking to pull back the curtain on the seemingly mysterious, often testosterone-driven world of stock investing.
And if four women without business degrees can figure out the market as a side hustle, so can you.
Join us as we learn the basics, buy, sell, scratch our heads, hold our breath, commiserate, and celebrate, hopefully more of the latter. We aren't experts, so please note that this podcast is for general information purposes only.
Yeah, anything resembling financial advice is purely coincidental.
That said, we are hoping to make a little or a lot of money doing this. And if money is power, we want some of that too.
So today I should note that Dana isn't able to join us, and it's unfortunate because she's kind of our crypto queen. I mean, she knows a lot more about cryptocurrency than the three of us, which is that's a good thing that that we're going to have this interview coming up. But before we get to the interview, I thought maybe JJ, you and I and Tula, we could just talk a little bit about our most recent foray into the crypto world. We've gotten a little deeper into it ourselves since we last talked about it. So where are you guys at with crypto this week?
Well, this was a crazy week because the market was very volatile. But I own a couple altcoins. So, of course, I own Bitcoin, I own Ethereum, and then I had invested a little bit in Dogecoin. I think that's how you pronounce it. Can we just briefly
talk about, right, like how we just had to look up how to pronounce Dogecoin because it wasn't like Dogcoin because the icon looks like how do you pronounce it? I don't even know how to pronounce that kind of dog, a Shiba Inu or something.
Oh, is it? I didn't know there was a specific breed it was based on. That's interesting. Well, anyway. So the reason why I decided to invest a little bit more in this is because there was this whole Reddit thread that has been in the news this week called Wall Street Bets. And people on that thread were talking about buying Doge and trying to get it up to $1. And so I thought, I'm going to get in on that. And the day that this was supposed to happen, I bought a couple $100 worth of Doge and I saw it going up. This was like late at night. I saw the rise and then it started to dip and it would not stop dipping. And I freaked out. I sold it at a loss. Then the next day it went up again. I bought more. It went up, up, up. I made $100. Then I went back in and it started dipping and now I'm holding. And this is all to say that I became a day trader in that moment. And it was very stressful.
Signal moment for you.
You became a one-day trader.
I became a single day trader. And it was so stressful. It was a good lesson for me because I got so panicky and I didn't even have a lot of money in this, but it made me realize psychologically, I don't think I can handle that minute by minute trading and selling. Not sure I'm cut out for that. So that was my little lesson of the week. So JJ, what about you?
Well, I also have some altcoins, including Dogecoin. And yes, I'm taking a similar approach now. I actually sold it and made a small amount of money and then got back in and now I'm underwater. So I'm just waiting. But this week I did some research about institutional investors in Bitcoin because I've been reading a lot about the institutional investment interest was going to be one of the things that pushed Bitcoin higher sometime soon in the future, and was giving it real legitimacy. And I discovered something pretty interesting for anyone thinking of getting into crypto and Bitcoin.
Do tell.
Well, I'll talk more about that after we hear from Anja.
Okay.
Well, you know what? In that case, why don't we listen to this interview that JJ and I did with crypto educator Anja Schuetz a couple of weeks ago, and we can help clarify some of these concepts that we've been struggling to wrap our heads around. And then after the interview, let's regroup. Today on Women Take Stock, we're really excited that we have a special guest with us, Anja Schuetz, who is a cryptocurrency educator. And we found Anja, of course, Googling around trying to understand this stuff. And your website is just so welcoming and encouraging and positive. And full disclosure, we have talked to you before this moment, and we just love talking to you. It felt like you were able to help us get a handle on this seemingly complex cryptocurrency market in a way that we haven't heard before. It's really hard to understand for people who aren't in technology, who are new investors, who aren't really people who deal with money a lot. So first, welcome. And then I would just love for you to tell us briefly a little bit about yourself and how you got involved in cryptocurrency.
Thank you for inviting me. Yeah, I got involved because I was taking stock of my finances. So I love the title of your podcast.
Yay!
It was about 5 or 6 years ago now. I had just moved countries back to Germany. I've lived abroad. And I was taking stock and just to see what's my financial situation. Do I need to get a job? Do I need really urgently new clients? Do I really actually want to keep on doing the business I was doing back then? And what I found was not pleasant. I noticed I didn't get any interest on my savings anymore in the bank. I noticed that the pension plan that I had started when I started my business as a responsible German person, that pension plan was not going anywhere. I was 10 years in already, and I had never checked, is this actually going to give me whatever they promised me once I'm going to be 65 or whenever pension starts? So I realized that saving money was just not smart anymore. And Germans are raised to save money, to be savers. And I noticed at this point, I need to become an investor. If I really want to be financially independent or financially just well in the future, I need to become an investor. So I registered in a trading and investment course, like a traditional one, stock market and so on. And I learned a lot about reading trading charts and was very interesting. I also learned a lot about how our money system works, which was very unpleasant. And then I heard about Bitcoin. Actually, someone in that course asked the trainer about Bitcoin, and the trainer was very negative about it. And he said, don't touch it. It's very volatile and it's very new and blah, blah. And I thought, don't we need volatility as traders? Something's just flatlining. Prices don't increase. You don't make any profit. Anyway, so I was checking it out, and I just fell into a rabbit hole. I think it was in 2015 or so. And I never came out of the rabbit hole.
That's amazing.
I was so fascinated because it's a completely different money system. And that is something that I know about women because I work with women a lot. Women often feel like they are not good with money or they have a problem with money. And my belief is really that money isn't the problem, but the money system that we're living in right now is the problem. And that's why I believe so much in Bitcoin, because it brings a whole new money system.
Can you just, explain a little bit about what you felt was wrong about the current money system, as we call fiat money, right? That's the word.
Yeah, nobody knows that our money is called fiat money. So all the currencies, all the national currencies of any country is a fiat currency. And it is Latin and it stands for let there be light.
Really?
So fiat money basically means let there be value. Let's print papers and just pretend they have value. Mm-hmm. But there is no inherent value there's just numbers on those papers. So we live in a fiat money system where basically the central banks or governments of countries said this money has value now. And there is one central authority per country or region that has the authority to print this money and bring it into circulation and to decide, should we print now or should we not? And the more money is being printed, the less valuable it becomes, because the more of something is available, the less we value it. Like gold, we believe gold is very rare. That's why we value it so much. That's why it has such a high price. So if all the pebbles on the street were made of gold, we wouldn't value it, because why would I sell you something for gold that I can just pick up from the street? So basically, we value things that are scarce or unique. And if something is there what's the English word? Unlimited supply, it's not valuable to us. Right. And this is actually what's currently happening, that I think in the US, like 30% of all history has been printed last year. Like, it's absolutely unimaginable how much money has been printed last year in combination with the pandemic and everything, of course, and to stimulate the economy and so on. But in contrast to that, we have Bitcoin, which has a limited supply. So what I was trying to say with fiat currencies, the more money is being printed, the less valuable it becomes. And for regular people like us, we notice this, that when everything gets more expensive. Yeah, our rent goes up every year. Our coffee becomes 10 cents more expensive, whatever. And the money printers, the central banks, they have targets, like inflation targets. Whenever we print money, that causes inflation. So more money is entering circulation, the supply. And inflation causes our money to lose purchasing power. And we feel that when everything is getting more expensive. That doesn't mean things are becoming more valuable. They are just becoming more expensive. So price and value are two different things. So Bitcoin, in contrast to that, has a limited supply. There will only ever be 21 million Bitcoins. So it's a deflationary currency, which is the absolute opposite to our current fiat currencies.
So let's circle back a little bit. What's the sort of bird's eye view? What is cryptocurrency?
So it's just another currency. Top line, it's just another currency. Of course, if you look under the hood, it works absolutely differently from the fiat currencies that we all know or have known all of our lives. So one thing I mentioned earlier is that Bitcoin has a limited supply and fiat currencies are unlimited. The other thing is that Bitcoin is decentralized. It is not owned by anyone. It is not governed by any one central authority like fiat currencies, which are governed by governments and central banks and issued by them. It is borderless. It is a global currency. Anyone in the world can participate. Nobody needs to ask for permission, which is also very different from our fiat currencies. Most people don't know this. I didn't know before I got into Bitcoin, but there are about 2 billion people or so in the world which have no bank account. Right. They are called the unbanked, and because they happened to be born in the wrong country. So this is just unimaginable for me. Right. And with Bitcoin, it doesn't matter where you are, who you are. All you need is a phone and an app, and you can participate. Right.
Now,
so it's much more inclusive.
And of course, the under the hood, I like how you said that it does look very different. It's built on something called blockchain technology. And as soon as you say that word, my mind just goes, I have no idea what that means. Help us out.
It's a chain of blocks.
It's like in kindergarten class.
Okay, so what's the easiest way to explain this? The official term is the blockchain is a distributed ledger. It's hard for me to say as a German. Distributed ledger. Good. And many people don't even know what a ledger is, especially non-native English speakers that I work with a lot. So a ledger is a record-keeping tool. Like 100 years ago, if you would have walked in a shop, the shopkeeper would have had a book and they would write on one side what they sold, on the other side what they bought. So that was a ledger on paper. As time went by, we started to have computers and spreadsheets, so we could do this much easier. But the spreadsheet was still saved on one local computer. Then the internet came along, and now we have Google spreadsheets or Dropbox. We have the cloud where we can share the same file and many people can access it at the same time. But there is still one owner. So if you have a Google spreadsheet and you share this with other people, you decide who you give access to this spreadsheet, and you decide how much permission they have. Can they only read? Can they make changes? And so on. Now with the blockchain, it's again one step further, because now there is no owner anymore, no central authority. So if we keep on going with the example of the Google spreadsheet, basically everyone, this is a public spreadsheet, everyone can participate. They don't need to ask for permission. They can only edit their own cells that they have the keys to, but they can see everything else. And nobody knows who the others are, just everybody sees that transactions are going on. It's very transparent. Everybody can view this, but everybody only has access to their own part in it. So on the blockchain, on the Bitcoin blockchain, that is your wallet, that's your Bitcoin address, and only the one who has the keys to a certain address can make transactions out of it, basically.
And how does one see this public ledger?
There are several block explorers, so that those are websites. One is called blockchair.com, for example, or there's blockchain.info. There are many different ones for Bitcoin. And of course, we have many other blockchains, many other cryptocurrencies, and they all have their own block explorers.
So I suppose really to go right to the heart of it, for folks like us who are looking to get their heads around cryptocurrency, Bitcoin in particular, understand it so they feel comfortable in investing in it, what are the steps there? Of course, they're the basic steps you do with every investment. You start reading and looking at what the news is and analysis. But because Bitcoin is unlike other assets, like buying a stock in a company where you have underlying value, how do we go about starting to think about that?
In terms of researching beforehand, or what do you mean exactly?
Well, you tell us. You talk to a lot of people about this as an asset. Yeah. Is it just, you have to, the risks, you break it down, you just have to take a flying leap? Or are there certain steps you recommend for people interested in getting into Bitcoin and other cryptocurrencies?
So like where to begin?
Yeah,
exactly. That's more succinct.
There are a couple of different approaches. One thing is, of course, that you should never invest in something that you don't understand. Of course, before you understand Bitcoin fully, it can take a while. Like I said, I studied this for a year before I dared to put my first dollar into this.
Oh, really?
I would suggest that the less you understand about something, the less money you put in. So you can use tools in the beginning that still belong to the traditional financial system, which is PayPal, for example, that offers to buy Bitcoin right now, but you will have those Bitcoins inside PayPal. That means you do not truly own them. You do not have the private keys to them, which is a very important thing in the real crypto space. If you are really dealing with Bitcoin on the blockchain, if you take the time to learn what is a Bitcoin wallet, how does it work, what are private keys, then you have true ownership of your money. Nobody can freeze your account or your wallet, but you also have 100% responsibility for it. So if you lose your keys, your money is gone. Of course, in PayPal or in a bank account, if you lose your password, they can just reset it for you. So it's also a matter of trust. Do I trust myself to keep my money safe, or do I trust a third party to keep my money safe? And I think when you're still learning in the beginning, the less you know how to keep your money safe on the blockchain, the less you should put in. And you should really take the time to educate yourself.
Did you see a couple of weeks ago, there was an article in the New York Times about these people who'd lost their keys?
It's everywhere. And that one guy in particular, 220 million.
Yeah, I don't know if this is all true because we are now in a bull market again. So every time the Bitcoin price goes up, so this will happen for the next year or so, 12 or 18 months, all of these scary articles are coming up. Yeah, I don't know if I trust this.
It's interesting, Anja, though, what you're saying about keeping control of it. And this is a little bit of the logistics, really, of buying and keeping Bitcoin or cryptocurrencies. And I think I started looking into wallets, and even that is like quite complex because you have to have certain kind, like, is your wallet going to be online or is it going to be an actual physical item that you like a drive or that you put it in and it has a password and you can lose that password and not be able to get into it. So I think it was interesting to me to discover that even once you purchase Bitcoin on an exchange, to transfer it to a wallet, you have to do a lot of homework there as well.
Yeah. And because exchanges are centralized, they are companies, basically. They are not much different from PayPal or a bank. So they hold your funds for you. But we need them right now as bridges between the old system and the new one.
In fairness, if we did this interview in German, I mean,
it would not be very good.
So we need the exchanges to be able to buy cryptocurrency, to exchange our fiat currency to a cryptocurrency. But then we shouldn't leave our cryptocurrency on those exchanges. So we should take it off and put it in a wallet that we truly own. And that is actually not much different from the way things are now, because you have a bank account and you have your physical wallet where you have your physical cash. If you lose your physical wallet, you're not going to call your bank and ask, hey, can you give my money back? No, because you were in charge of it. And it's exactly the same thing. It's only that it's a digital wallet now, and it's on your phone or on your computer or on an external device. And there are different security levels. So when you decide to really own your money and use such a digital wallet, you need to educate yourself on security and safety. And
because there is a big difference. In my actual leather wallet, I have maybe $5 usually, if that. Whereas in the cryptocurrency wallet, hopefully, there's a lot more than $5, right?
It depends. If you have a digital wallet on your phone, you will also only keep pocket money on there because it might not be the most secure one. But if you have an external device that is never online, that's never connected to the internet, those are considered the most secure. So this is where you can keep your life savings. You shouldn't keep your life savings on any device that is constantly connected to the internet.
Yeah, I read about some guy who keeps his hard drive in a safe deposit box, which I thought was really funny because he's basically using the conventional traditional bank to hold and secure his new cryptocurrency. There's something very meta about
banks, that. Banks need to find a new purpose, so maybe that's it.
You know what's funny? I was like, speaking of new purpose, one of the financial advisor that I use for, my retirement and my other things, I asked him what he thought of cryptocurrency. And it was interesting because he didn't say don't do it. He said basically, don't do it with anything you can't afford to lose. You could certainly stand to earn a lot of money in it. The problem is, in his mind, that it is the antithesis of the nation state, right? Like that governments are going to become so threatened by cryptocurrency that at some point it's going to blow. They're going to put on regulation after regulation, and it's going to all, sort of disappear. What do you think of that?
That's not so far away in the future. I think this is already happening now. I think the next 2 years will be very rocky as the old system fights against the new system. So all the central banks right now are working on their own cryptocurrencies or digital currencies, but they will be centralized. They will still be controlled by the central banks. So they are still the absolute opposite of Bitcoin. And just because you put the word crypto in front of it doesn't mean it's still not a fiat currency. As long as it's still issued by a central authority and can be printed at will, it's a fiat currency. So the people who have been very much against Bitcoin 3 years ago, they are now buying and supporting it. So it's really nice to witness this evolution that's happening. It's only 12 years old, Bitcoin.
Yes.
So I think we still have quite a struggle during this evolution. And that's why I mentioned these articles that scare people. They will keep coming out, and there will be also some serious regulations happening. But I do believe long term, they will not hold. So we will have two money systems run in parallel for a while, I think. And then we just have to see. But I have no doubt that Bitcoin will succeed long term.
And of course, Bitcoin's not the only cryptocurrency. Do you yourself invest in different ones? Are you all Bitcoin all the time?
I checked the other day, I have like almost 70% in Bitcoin of my holdings. And then 4 or 5 others. And then lots of little tiny $10 here and there in some coin.
When I tell friends that have invested in Bitcoin, one of the first things they ask is, what is a Bitcoin?
No, the questions I get most is how to buy, and which I understand, but I wish more people would ask, how do I store it safely? Because everyone can just Google, find out how to buy, but there are so many ways to lose your money in this space, simply because you think it works just like the traditional money system, but it doesn't. And yeah, so every single day, this is not a lie, but every single day I deal with people who have lost large amounts of crypto.
How do they do that? How are they losing it?
Well, one thing is that with every bull market, so especially now when all the prices go up, suddenly everybody hears about Bitcoin and crypto again. And there are many scammers who take advantage of that. So there are suddenly YouTube ads or Telegram groups, whatever, where someone creates a beautiful website and says, oh, if you send us X amount of money, we will send you 3 times back. Just send it to this address. And what people don't realize, first of all, we would never believe this in the normal world, yeah. But crypto is new, but same thing applies. If it sounds too good to be true, it is probably too good to be true. And what people don't realize is once they have sent money, nobody can get it back for them, yeah, because that is the nature of blockchain, which is actually a good feature that only the person who has access to the address where the money is has the power to send it out. But that means also, once you have sent money to an address, nobody can help you. Only the person who owns it can send it back to you. But if that is a scammer, they will not do that.
I wanted to circle back really briefly on one question when we were talking about the blockchain. One thing I didn't ask, what is mining?
Mining. So mining comes from gold mining. Yeah, gold is being mined physically, and Bitcoin is being mined digitally. And that basically just means, so miners on the Bitcoin blockchain are computers, and they basically do a lot of computing. They solve a lot of digital puzzles and compete against each other. And there's a random system, and one miner basically solves a puzzle, and they get to add the latest block to the blockchain. And whoever adds the latest block, there is a block reward, and this is right now 12.5 Bitcoin. So this is how Bitcoin is being created, and it's also how the miners make money. Besides, they also make money from the transaction costs that people pay when they make payments on the blockchain, but they also, if they win a block, they get 12.5 Bitcoin right now.
Which is a lot of money right now.
It's a lot of money, and this amount gets cut in half every 4 years. So this is, again, the opposite of the traditional money system where you can just print money at will, not you, the central banks. And on Bitcoin, it is basically written into the code, like approximately every 10 minutes, a new block is being added to the blockchain, and the amount of money that gets paid out for that. So it started with 50 Bitcoin per block. Then 4 years later, it was 25. Now it's 12.5. And every 4 years, this amount will be cut in half. And in the year 2154, it will be finished.
Because
of course, you can
they
infinitely cut something in half, but
and at a certain point, there's a limited number of Bitcoin, right?
Exactly.
So you can't keep mining if none exist.
Exactly, 21 million Bitcoin. So this will be done in the year 2154. I hope that's right. And then everything will be in circulation. So it's a very limited amount already to start with, but already 4 or 5 million are lost. People have lost access to those. Then there are a lot of Bitcoin in the hands of some people who will just never sell. So the amount of available Bitcoin that actually are available on exchanges to be bought is getting smaller and smaller. And that's why, since if something, and the demand is growing, and if the demand is growing, then either the supply has to grow as well or the price. And since the supply cannot grow because it's fixed, the price just keeps going up. So
what's the ultimate takeaway? I mean, why is this? Because it's not just about like material gain right here. When you're talking about an awakening, you're talking about something bigger than that. Yeah. So what's the big takeaway? If you are able to get a handle on cryptocurrency and be agile in this world, what does that stand to give somebody?
Yeah, I'm really glad you asked that, because it's for me also, even though I really focus on helping people create a plan B for their pension. So this is about money, but it's really not, money is not the only thing. So for me, Bitcoin is about freedom. It's a freedom movement for me. You are 100% in control of that. So it is a freedom movement in the sense that, you are 100%, you have 100% ownership of your data, of your money, and there's no third party that can stop you from doing whatever you want to do.
Thank you so much for your time and your wisdom. And we will definitely be following you. We will continue to follow you. And I'm sure that as we get deeper into this, we're going to have some more specific and perhaps sophisticated questions to throw your way. So I hope you're willing to catch them.
Let's hope I can still answer them then.
I'm sure you can. All right. So I guess it's later in the day for you guys. So have a wonderful evening. I'm going to it's sunny here. So I'm going to go enjoy that.
Thank you.
Take care.
Thank you, Jen and Jen.
Yes. Thank you. Thank you.
Thank you, Anja.
So Tula, sorry you couldn't join us for that interview, but what did you think?
I thought it was a great interview, and your questions were very incisive. And I really like how she kind of broke it down to like third grade level for someone like me about how gold is valuable because it exists and there's a certain amount of it that exists. Whereas with paper money, you can just print out however much you want or need, or the Fed decides. And so the intrinsic value of cryptocurrency, that's one of the things that really distinguishes it. And that was really helpful for me to hear.
Yeah, JJ, now we've had a few days to kind of think about what she talked to us about. I'm just wondering, where are you at?
Well, what really struck me was something she said right at the beginning, which was this moment after taking a look at her finances, she went from being a saver to an investor. Mm-hmm. And that is such a seminal moment, I think, a shift in mindset and an important milestone in every woman's life.
It's like getting your period. Or menopause. I don't know. whichever end of the life stage you're at.
Whatever. But yes, and I think that shift in thinking, whether you invest in crypto or whether you invest in traditional equities or mutual funds or whatever, is so important. And that kind of thinking then can take you on to opening your mind to something like crypto, which does take, let's face it, a little bit of work to understand.
Yeah. Like I appreciated her explanation of blockchain, but I'm still trying to wrap my mind around the blockchain and the mining. And like, it's sort of the kind of thing where I accept the plane flies. I don't know exactly how it flies, but I accept it. So I'm like accepting blockchain, but I don't fully understand it yet.
Right. Which is still what our previous interview said, Lori, when we talked to her quite a few weeks ago, was like, you might not know how your television works or your computer works or whatever, but you still use it, and don't not use it because you don't fully understand it. You're going to miss out, right?
Yeah. But she did make the point too, that you really shouldn't be investing large amounts of money in crypto unless you do understand it. Like you do want to do the research so that you feel more confident and know what you're doing. So I think it's important that we're educating ourselves about
and
that.
I have to say, this is where I've fallen with this is my thinking this week. And again, just for context, this is the week that, like you said, Tula, the whole GameStop thing blew up, and the whole
yeah, it was basically Reddit's week. Reddit was controlling the stock market,
right? And
this week.
one of the things that I realized while I was also watching Dogecoin or whatever the heck, was that in my mind now, there are sort of two different tracks of my own investments. There are the sort of more conventional ones where I really am trying to understand what does it mean when you look at a company's valuation, the products they're putting out, what their actual potential for profit is.
Right.
And cryptocurrency, which is quite different. The one thing that that sort of helps me wrap my head around crypto a little bit better, which Anja said, was think about it. It's like a currency. There are people who trade currencies. You trade euros, you trade rubles, you trade whatever, and you make money or lose money by doing it. And so it's a different type of trading. And I think in my mind, I was sort of conflating like my regular stock shares with my crypto shares. And they really, really are different things. And like you said, I think in either context, whether you're talking about stocks or whether you're talking about crypto, certainly at our level of investing, never, ever, ever put in money that you can't afford to just literally like wipe your baby's butt with, because it's like, it could just, not to be crass or anything, but literally like this money could just.
Yeah, we wouldn't want that.
And it's fun. I mean, the fun thing, like, so when I was watching the Dogecoin go up and down and like pulling my money in and pulling my money out, and by the way, we're talking about like, I don't know, $50 worth here and there. It was crazy how completely psychotic I got about it.
I know. I did too. I feel like I was losing my mind.
Well, and this is the thing. This is a good, like, if you are going to play around, a good way to do it. I think you put in a little and see how you feel about even just the process, because crypto, well, any currency, it trades 24 hours.
Yeah.
It's not like the stock market where you can, after a big day of ups and downs, you can, the bell rings. I don't know if people know what that means. The bell rings.
The bell rings, right.
The stock market. And you can go, oh, whew.
Yeah,
I can take a breather. You are so right. I actually was literally thinking about this, that I was like, maybe I should just trade in conventional stocks, because that way my day is done and my day is done. Like I don't have
that's
to.
That's a really good point, because I think one of the reasons why I was losing my mind was it was 11:30 p.m. and I was exhausted. And then you go into that kind of fatigue mode. And I was like, when is Asia going to get in the game? Like it really is this 24-hour thing. It's like, maybe the Asians will make Doge go up.
I have an idea.
What?
We do have the benefit of all of us being in different time zones. Maybe what we should do is give each other the login to each of our accounts. And so it's like, tag, you're it.
That's great, yeah. Hey, JJ, I lost $5,000 for you, but you're it. See if you can get it back up again.
I believe in you.
Talk about trust in your friends, right? No, but that's a really good point. Although, I mean, institutional investors are getting in on crypto, right, JJ?
Well, yes. So, and this actually, two things you just said, trust and institutional investors. I kept hearing
the same sentence.
I know, crazy. Actually, though, for most of us, institutional investors are the people who look after our pension funds or retirement accounts. Yeah. So they are very important to a huge proportion of people. So I decided to do some research, and I found two different pieces that had some quite straightforward information about it in very plain language. Okay. One was in Forbes.
Okay.
And it starts off with the writer saying, I've spoken with JP Morgan and one of the world's leading crypto analytics firms, Chainalysis. And turns out institutional investors are not investing, italics his, in Bitcoin as a store of value. In fact, quote, real money, as JP Morgan calls it, hasn't bought a single Bitcoin yet. Now, I read that. It blew my mind. Now, if you read down the piece, it unpacks it, where most asset managers still prefer Bitcoin in the fund format, which they're these, bundled together Bitcoin funds.
Okay.
And
bundled with other cryptos or bundled with other traditional stocks?
Don't ask me questions I don't know the answer to.
Okay. You know what, JJ, I don't mean to interrupt you, but let's make sure we link this article in the description of this podcast, because I think it'd be pretty interesting to read.
Yeah. Yeah. And so, okay.
Sorry. I'm asking a question.
And the writer goes on to say that most institutional buying, it seems that most institutional buying comes from speculative traders and high-risk funds. So there might be interest from more traditional quarters, but more of the outliers of those more traditional quarters. At the same time, I saw this piece on Institutional Asset Manager. I don't know. That's a UK publication. I don't know where it stands in terms of its reporting, but they had a piece which was very interesting with its language, where it said BlackRock is opening 2 of its funds to the possibility of investing in Bitcoin futures, signaling mounting interest from institutional investors in crypto markets. Now, on the face of it, that seems positive, but they're talking about a possibility and investing in not Bitcoin, but Bitcoin futures. So
it's I'm thinking about doing this.
Yes. And so that
talk about a hedge.
I think that's very it's very informative and really shows you that, one, we all know this, but just to reinforce it, when you read about something on social media or message board, if there's a fact in it or even an opinion, like go check it out yourself. And that while it does seem like there is institutional investor interest or growing discussion around Bitcoin, which could be very positive for cryptocurrency in general, that it's not a done deal. We shouldn't take it as red fact, and that kind of going and digging in a little will make it help me understand to what extent they were talking about institutional investors in Bitcoin. It's not necessarily they're going out and buying lots of Bitcoin, which is actually what, as an investor in Bitcoin, you'd love.
Right.
It's actually much more nuanced than that.
Nuance.
Yeah. And I think, as Anja mentioned, Bitcoin is only like 12 years old, right? It's really new. And if you think about the decades it took to form the current system that we have now, the fiat system, we could be at the beginning of something that's incredibly, it is going to become the new way of doing business, but it may take a long time. And so,
and careful there, Chula, because I think we keep saying it's going to be the new way. It's the market of the future, and maybe that's true. But we're saying kind of like what JJ just said. We're saying that because we've heard people like Anja and Lori say that, and because it's kind of the sexy new thing. It may or may not be true, and we don't really know.
But in this, for example, in this Forbes piece, there are optimistic predictions. JP Morgan has a target on Bitcoin of $146,000 per Bitcoin.
Wow.
So,
wow. It's so weird. Okay. Where does JP Morgan come up with that target? I don't know. I'm sure there's a method to the madness, but
they've got number crunchers. They got.
I think the really important thing, though, the big takeaway for me anyway, is just this constant reminder that, yes, this is exciting and interesting. And yes, it's good to have a little piece of the pie if you can afford to lose it, because you could stand to make some money from it. And that's pretty cool. And it's really important to try to understand this because it very well could be the way that money works in the future. And if nothing else, trying to understand cryptocurrency is helping me better understand the so-called fiat currency.
Totally.
Right?
In contrast
and so I think it's all really valuable stuff. Just everything to be taken with not so much a grain of salt, but just with a grain of caution, I guess.
Yes. And make sure you write your password down somewhere that you
if you move your money
find
into
it.
a wallet. Yes.
Oh my God. Right.
Or share it with your 3 besties.
Yeah. So like little
maybe
confession,
we should all share our passwords with each other.
I actually, like when I set up my Coinbase, they give you, it sort of comes up, here's your password. And I printed out that page immediately. And then I forgot that I'd printed it out. And like 3 days, that was weeks ago. And a few days ago, my husband comes and he's like, did you print this out? And he pulled this thing off the printer and it was like all my passwords. I was like, I guess
he's like, I'm going to shred it. And it gets shredded.
No, like so much for security. I just left it there. I mean, granted, it's our house. It's COVID. Nobody's coming in to snatch it right now. But it was like literally just sitting there in a pile of papers. I mean,
maybe that'll be the new tattoo. People start tattooing their wallet password on parts of their bodies that,
Of course, like that just got like to this really gruesome image of my mind. Never mind. Like in one of these TV shows that we've been watching where they cut off the person's finger so they can use it to open their iPhone.
I know.
So like they slice off.
God.
Never mind. Okay, guys. So I think we should probably wrap it.
On that note.
On that note, I don't know. How do we sum this up?
Well, this is something that we're gonna stay on top of, because It doesn't seem like it's going anywhere anytime soon. And periodically,
truly, it's going up and up and up.
At the same time, we're also going to be focusing on some of the ins and outs of regular equities investing, like dividend stocks and
what's an option?
What's an option? And also just decision making around stock picking and stock buying.
Right. You mean like the old dusty stuff?
Yeah, I love the old dusty stuff.
Let's get the old dusty stuff. All right. So I hope you guys have a really good week and good luck with all of your various forms of investments. May they all go, to the moon, and then you sell quickly before they crash or something. Right. But in the interim, anybody who wants to send us some ideas or some thoughts, you know where to find us at, what's our name? womentakestock.com. And, we're pretty much on every podcasting platform you could find, Twitter and Instagram. So get in touch.
Yay. Bye.
Bye.